Hey there traders, welcome back for episode 21 from the StockBandit.tv. I'm sure glad that you joined me. So in this episode, what we're going to do is take a good look at the major averages, going to run through the big three, and just kind of assess the current conditions right now for the market. It's something that we do every weekend here, and the reason why we do it is to get a good look at the overall picture, because we know that individual stocks are influenced more than anything by the overall market. And so if we get a good handle on how the indices are moving, then we know that many stocks are going to follow, and that definitely helps us with knowing what to trade and how to be trading. So we've got a holiday shortened week this week, obviously. That's why this video is being put out on Monday as opposed to Sunday. So keep that in mind, and yet it's sure to be an exciting one as usual. Now, we've got kind of 3 degrees of strength right now, for lack of a better word. The NASDAQ is holding up best, S&P 500 is kind of in the middle, and the Dow Jones Industrials are currently the weakest of the bunch. So let's run through all 3 of these, and I'll kind of show you what I'm talking about. Up first is the NASDAQ, and we've got a rising trend line here that started right there at the November low. It's been touched a few times in recent weeks. We approached it last week, didn't quite break it. Didn't quite touch it, in fact, but the more times the trend line gets touched, the more valid it becomes. And so this one certainly is a valid uptrend line right now. However, in the big picture, we still remain very much range bound in this average. We're essentially just moving sideways here. And for now, that's okay, although it really does keep the day-to-day action very fickle. Now, in the near term, we've got this rising trend line right now that's about the 1488 area. And then we've got the upper end of this big trading range at the 1603 area. So right now we're kind of sitting right in between those 2 levels. And until we get a good solid break above or below, there's really not a whole lot to be expecting here other than more flip-flop action back and forth in the meantime while we wait. Now for the S&P 500, this one's not holding up quite as well, although support still is intact right now in the near term. Obviously, this one is also very much range bound. We have horizontal white trend lines here marking upper and lower ends of this big trading range. It's been going on for something like 13 weeks. I haven't counted it up lately, but I think that's about where we are. In the near term, though, meaning over about the past month, we are in a little bit smaller trading range here, which is very well defined. So the lower end of that are these January lows. That's at the 804 zone. And we also have upper resistance up here at the 877 level. That's where this index has been finding resistance in the near term. So until we get a good solid breakdown through those January lows around 804, of course this longer trend line right here is the 815 zone. That's the lower end of this big picture trading range, but near term we have breached that. Nonetheless, a good solid breakdown even through the 800 level, and a good solid close below that would very likely mean a test is coming of these November lows, and so that's something to keep an eye on. And for the Dow Jones Industrials, these are the weakest of the bunch. On Friday, this index closed right on its short-term support zone. This is the 7850 level. It has been tested a number of times in the past couple weeks, and so it is a valid level. Underneath that, though, if we get a good solid close underneath 7850, meaning if we do see some good weakness to start off this next trading week, then these November lows are only going to be about 400 points away, and they would probably be approached very quickly on the downside. So that's what we're keeping an eye on right now. We're still range bound at the moment, still sitting within these trading ranges, but if we do get a good solid break below them, the selling pressure is likely to intensify quickly, and that is certainly something to be aware of as we approach a new week of trading. So thanks for joining me for this episode. I'll be back soon with more videos, but until then, trade like a bandit.